sure by now most of you would have started investing in mutual funds. If not, then please do and benefit from this amazing growth story. So in today's video, I would be giving a brief overview of our mutual fund industry in India. What are the key categories of schemes and funds which one can invest in? And also what are the key points one can keep in mind while choosing a mutual fund scheme? Now to start with, if you look at the size of mutual fund industry in India, total AUM has become 40 trillion INR, which is around 40 lakh crore. It has grown by 5 times in the last 10 years. The total number of schemes are around 1400 and total number of fund houses is close to 45 now. There are close to 4 crore investors with 14 crore folios currently. So you can see that there's a major scope of growth in the coming years. And the total revenue of the mutual fund houses in India has been close to 18,000 crore last year. Some of the top fund houses which you would have heard of is ICICI, HDFCs, SBIs of the world. But there are also many new fund houses which are coming up and be approved by regulator like MK Global, Angel One, Bajaj Finserv and few more. So now let's look at the key categories of the mutual fund schemes in India. Number one is the closed-ended and the open-ended schemes. So open-ended schemes are one which are available for investments and redemption even after the initial offer on any of the business days, whereas closed-ended funds are available for investment on the initial offer and they are mature on a fixed date. Secondly, the active and the passive funds. The active funds are the ones which are more actively managed by the fund managers and they look at beating the benchmark index with an alpha. Whereas passive funds, they more or less follow the benchmark index and the objective is to track the performance as closely as possible. Thirdly are the portfolio holdings, whether it's equity, hybrid or a debt, etc. fund. So equity fund are the ones which invest into equities largely, and the debt funds invest into fixed income securities, and hybrid fund can invest across equity and debt and other asset classes. And there could be like a multi-asset class fund also. Thirdly, it could be a sectoral or a thematic fund. A thematic fund is whose objective is to based on a particular theme. So it could be for like your child education or a retirement savings, or it could be an arbitrage fund. And sectoral funds are the ones which invest largely into one sector. So it could be your infrastructure, banking funds, or your pharma funds. And lastly, other categories available are the ETFs, which are your exchange traded funds, or the fund of funds. Now, fund of fund, as the name suggests, invest into other investment funds rather than investing into equities and bonds directly. Now, let's look at the key points which one can keep in mind while choosing a mutual fund scheme. So, number one is the investment horizon. So, if the investment horizon is more than 5 years, then one can go for equity schemes and enjoy higher returns. But if you want to invest for less than 5 years, say 3, 2 or 1 years, then one can go for debt and fixed income securities fund. Second factor one should look at is the fund manager, the fund size and the fund expense ratio. It's always good to look at the who's managing the fund, what has been his expertise and the experience in the market. What is the fund size? Because the larger the size, it can enjoy the economies of scale and the expense ratios would be lower. Then the performance history of the fund. So if you're looking for investment into equity funds, then it's always good to look at the consistency of the returns over 3, 5, 10 years. And lastly, the liquidity which one looking for. So if you're looking for money immediately, then one should not go for A-listers fund because there's a lock-in for 3 years. And also, the certain funds have exit loads for 1 or 2 years, which one should keep in mind while investing. And lastly, the taxation which is applicable on the funds. So, and there have been recent changes in the taxation of debt mutual funds, where these funds used to enjoy the long-term capital gains taxation benefit, and that has been removed, and the taxation will be as per the income tax slab. Similarly, the equity funds, they enjoy lower taxation of around 10% for long-term capital gains and the 15% for short-term capital gains. Hope you found these points interesting and we look forward to meet you soon. Thank you.